I welcome you all to this panel discussion organized by the Euro-Mediterranean Economists Association, EMEA. We are based in Barcelona. We are an independent think tank. We are here today at the Mediterranean Coalition Pavilion at the COP28 in Dubai, under also our initiative, which is the Sustainable Transformative Alliance. And we are here trying really to work on the transitions, particularly the sustainable transitions, in collaboration with the private sector, the public sector, and the academia. So this specific panel is about energy transition in the Mediterranean and Africa. So which are the needs and what are the perspectives for accelerating these energy transitions, and which are the hurdles that we are seeing, in fact, in this specific transition, which is core to the global agenda, which also we know very much that there are still a lot to do in different perspectives. In terms of, for example, the renewable energy integration, we need to really move much more rapidly into adopting and adapting renewable energy sources and really phasing out the fossil fuel as quick as possible. The second is, in fact, for any transition, we need a policy framework that is stable and also need investment and financing. The needs are huge, and I think we need also to be aware that this is also linked on investment in the infrastructure for the transportation, for the production of renewables, and also for pushing the demand for renewable energy in the different countries. And of course, there are disparities between the countries, between Europe, the Mediterranean, and Africa. There is also another key point here is energy security and dependency. And I think this is also, we can clearly see that fossil fuel is still predominant in our economies. And of course, within the geopolitical tension that we've seen, not only on the east, but also in the south, it's very clear that this is becoming much more complex to deal with in terms of the energy supplies and the possibilities for the countries really to move faster, because this is also taking much more cost, and also there are many costs that are being directed to other needs. Another issue is the technological innovation. Innovation is essential for renewable, for transportation, for also storage. And not all countries have the innovation. This is also important to talk about the technology transfer and innovation transfer. So for the different countries, Mediterranean and Africa, of course, we are thinking that the Mediterranean and Africa, they have the solar, they have the wind, they have the natural resources in that sense. But still, we need to think very carefully how to work together in a collaborative framework that will be really win-win in both sides of the Mediterranean, both sides of the continents. And this is essential too, to think about just transition, not to leave the communities aside. And then there are many innovations, for example, in terms of the of all these technologies that we've seen. We talk about the blue hydrogen, pink hydrogen, other type of hydrogen, but then at the same time, we really need to have a clear framework for sustainable development and ensuring that all countries have access to energy and electricity, and everybody is benefiting for its own sustainable development. And also, while, and I emphasize, dealing with climate change, adaptation, and mitigation at the same time. So with this introduction, I would like to welcome our panelists today. I would like to start from my right-hand side, Giulia Giordano, who is the head of international program at ECCO think tank. So you've been working very much on these aspects of climate change, of energy transition, and so on and so forth. Second, we have Nadim Abillama. Nadim, he is the Middle East and North Africa Program Officer at the International Energy Agency. So thank you for being with us today. Lisa Guarrera on my left-hand side, who is the Director of Monitoring Modeling Division at the Observatoire Méditerranéen de l'Énergie. So this is, thank you very much for being with us. Federico Pontoni, he is the Program Director of Technology and Energy Transition Research Program at FIM. FIM is Fondazione Enrico Mattei in Italy. So thank you for being with us. And Dean coming from Power Shift Africa. He is the program. He's actually a campaign lead on many aspects related to how to have Africa into the debate. And thank you for being with us again. So I would like to start without further ado with our first panelist, Giulia. So what is the renewable energy potential in Mediterranean Africa, and how do you see really the role of mini grid solution in terms of transportation? So please.
First of all, let me thank you, Rim, and thank EMEA and the Mediterranean Pavilion for organizing such an important discussion. I think in this moment, this is very timely, talking about energy transition in the Mediterranean, and we're seeing so many other similar conversations happening in other fora and other events like this. I just heard it was the appointment of a new special envoy from the European Union for the Mediterranean, meaning that the issue of energy transition in the Mediterranean is really gaining the attention that it deserves. And this is important not just for the countries in the Mediterranean that share a similar destiny, but for the future of global transition in general. So we need to understand really how this region can respond to the target, the global target that was given just recently of tripling renewable energy. So what the Mediterranean can do to help contribute to this target. And we know that the Mediterranean has huge potential for deploying renewable energy, especially some countries that are already like the front runners in the development of renewable energy, solar and wind. What I think it's very important here is to create political will for moving forward with practical solutions and create the understanding that the region is really sharing similar threats in terms of climate risks. And we need to find solutions that are shared between the countries that are sharing the similar problems. This means really overcoming the divide between the northern shore and the southern shore of the Mediterranean. So still the whole region is still very much dependent on fossil fuels, as you said. It's around 66%, both northern and southern shore. But the potential is very much high for deployment of renewable energies. What is important to do is making sure that all the institutional actors are involved for creating the right policies, the right financial choices and investments in the region. And there are many opportunities. We saw that just recently, like last year, 2 years, there was the signing of an agreement between the European Union and Morocco on a green partnership. So examples of such partnerships are important to really move forward with this. And I think I'll stop here, and there's going to be a second round of.
That's fine. So, Giulia, you mentioned there is a huge potential for renewable energy. Of course, you have solar, wind, and other particularly types like biogas, biomass. So how do you see really the future of that in the different regions? Of course, we talk about the Mediterranean, North Africa, Middle East. That's part of it. You have North Mediterranean. Also, you have African countries, which are below the North African part. So how do you see that potential, and what do you see the obstacles to deployment, in fact, particularly in terms of technology and innovation?
So I think the technology is there, just needs to be deployed. There are technologies that are more advanced than others. On solar, we saw great progress in the last decades in terms of costs and the results, technological results. Other technology needs still to be understood better, like hydrogen. You said there is like a rainbow hydrogen hype. So we probably need to understand better how it works. And but still the technology is there. Probably the major obstacle is creating political will to overcome all the regulatory barriers that really are slowing down cross-border cooperation, for example, when it's not necessary. And I think it's the International Energy Agency that said that it's not necessary just to develop renewable energy if you don't create the grids to connect and share that energy with other countries, so that you can overcome also technical difficulties like seasonal storage issues that can be overcome when you share electrical grids between many countries in the same region.
And then what do you think about the issue of transportation?
The issue of transportation, I mean, needs to be probably addressed on several levels. One is really creating the alternatives for current mobility to offer sustainable mobility options, but also probably it needs to involve a whole reform of the way we move in cities, we move between cities. So probably it's a much bigger question that is not just
electricity transportation.
Electricity transportation. It's probably also pushing for public transport. There are many other issues, and here in transportation you have also many other options, like hydrogen would also be considered, for example, one of the carriers.
Thank you. I'd like to move to Nadim. And Nadim, how do you see, of course, the opportunities and also the potential for investments
So, I mean, maybe we can start with a small global overview that we 2 months ago we released our finance report, and it was very interesting to see that in the past, since 2021, over 90% of extra investments, and notably in clean energy, came from advanced economies and China. That leaves little room for other parts of the world, unfortunately, and this is where we've seen that, especially since the war in Ukraine and other geopolitical events, especially in the post-pandemic recovery, we've seen that there's definitely an acceleration of clean energy transitions, but also one that is heavily concentrated in a handful of countries. Hence, this is why a lot of significant parts of the world, essentially in emerging and developing economies, are not benefiting from that growth. There's a lot of reasons, and every country has its own specificities, but generally what you could say that access to finance and cost of capital is generally higher in these countries compared to advanced economies. Some of it is attributed to a perceived higher perception of risk for these countries, and some of these risks are also real to some extent, depending on the country. But if we want to zoom in on the Middle East specifically, we could see that between 2019 and 2023, which is projected for now, the increase in investments is below $5 billion, which is relatively weak compared to other regions. And we can see that very interesting to see that the ratio of clean energy investment relative to total investments in the energy sector is 0.1 per $1 invested in fossil fuels, while it is much higher in, for example, places like Europe. So again, the region is also one that you all know very well. You have different typologies. Some organizations label the MENA region as with producers and importers, but some of them, like the World Bank, for example, add an extra split where they would mention the high-income exporters relative to the lower-income exporters. And then the political economies of these countries also vary. But overall, its investments in the region are still dominated by fossil fuels, at least when we look at the investments. Now, there's a lot of encouraging signs that we've seen in terms of how countries, some countries like Jordan, for example, or Morocco, were able to develop leverage international financial institutions, finance, make use of blended finance, where you had, IFIs who were able to de-risk some investments and then attracted some commercial investments. That's also very encouraging. Yet, when we zoom, for example, if you want to look at the power sector and the ramp up of renewables, we can see that power sectors in the region are on average heavily dominated by oil and gas. Over 90% of power generation is led by thermal power plants. So again, we talked earlier about climate change. We can see that this region is much more affected than many others in the world. Demand for cooling desalinated water is gonna increase and is going to put a strain on demand, especially energy efficiency measures on demand side are not really able to counterbalance that growth. Again, just to bring a more positive note here and to pass on, we're also seeing very interesting moves in GCC countries, notably like in Saudi Arabia and the UAE on the supply side. We've seen nuclear now. People disagree on sometimes if it's clean or not clean, but at least it's lower emissions. In the UAE, we've seen the plant recently, so we see on the supply side a lot of effort. But again, these are in terms of finance, they're very specific to the GCC because capital is structured in a very different way for the projects. A lot of developers are also homegrown, like the likes of Aqua Power, Mazda, etc. So the structure of these projects are very different from what we see in other parts of the region. So I think I'll leave some time for discussion later if you want to deeper.
I have one question. You mentioned the role of China. Do you see China deploying investment and financing in the Mediterranean and Africa south part, and how do you see the future of that? Or it's only in China? So how do you, since you have a global view?
I mean,
renewable?
Yeah, what we can say with much more confidence is at least on the supply. If you look at the supply chains for, to be specific, solar, PV, and wind, where it's Chinese dominated today. This is also the case for markets in Europe, for instance, where you can see a very a challenge in terms of localizing some of the production or some of the supply chains for solar PV and wind. So from that point of view, you can say that China is definitely present in the Middle East, but it is also in terms of large projects or large PV projects, like in the UAE recently, EDF from France having a significant stake, but the name of the Chinese company, but it had an equal stake in the project. So we can see that there's definitely Chinese presence in these investments. But again, there's also, at least from what I've seen in the region, they're much more present in countries that are perceived as lower risk than others, but that can change.
I read an article in the FT, I think a couple of weeks ago, and it's clear that China is leading globally in terms of green transition, in terms of investment, even above the US and Europe. Can you confirm this?
I mean, in several technologies, they're definitely leading in terms of volumes and investments. They had it's a long discussion that goes beyond energy as well, but they had an integrated approach to the development of their supply chain. They made sure they were able to produce the components end to end, and had which maybe other countries didn't do in a similar way. And that gave them a leadership role in some of these technologies today. Yet that's why other countries now are trying to accelerate the investments and trying to rationalize also their supply chains to be able to compete. There's definitely room for a more diversified supply here. And there's also, of course, the element of what we call the critical minerals here, or the raw materials that are also very concentrated, not only in China, but in a handful of countries, some of them being in South America, some of them in sub-Saharan Africa. So there's also something that is in the making, and it's very hard to predict how it's going to be, because I'm not going to go into the details of the critical minerals supply chain, but there's not only the availability of the raw materials, but also the whole value chain with the processing facilities.
Thank you very much. I would like to move to Lisa from the Observatoire d'Énergie. How do you see the potential for renewable? And do you agree that with Nadim that we are of course, we need to accelerate the transition on this part of the world, and catching up in a way with China nowadays, of course. So let's see how China evolves in the next few years. But I always look at two aspects. I mean, in practice, what countries are doing, and then what they are, I would say, communicating they are doing. So there is a gap there, and we need to also understand that gap based on evidence. And this is why I think the work you do and many other research organizations, it's important to have the correct data and connect with, okay, these are the scenarios and estimations of what we need in the next, say, 2030 to fill in, you know, the commitment by 2050 or 2030, depends. But then at the same time, to look at the speed of the transition based on the data that we have at our disposal. So please.
Thank you very much, and thank you for having us here. It's quite timely because we have just released our latest perspectives, so Mediterranean energy perspectives. So we deal with the Mediterranean area, so that's 26 countries. We model them separately. So there you have in a nutshell. So I'll be presenting, and I'm quite happy to see that we're actually in line, and it's actually nice to see that now everyone's on the same kind of messages. I mean, everyone is seeing the same thing, and it's in the north, in the south, and globally. So this is something that's quite new in a way, because before there was really different ways, and I think now everyone's sort of coming together, and it's really interesting. What we see, so we have two demand scenarios. I think the first message, and here you've got the two main, and you were asking renewables. There's two main stigma for the coming years, as they always have been. There's two sides of the Mediterranean with two different trajectories up to now. What we want for the future is not what's happening now, and you've mentioned where are we. What we have in a reference scenario is not a business as usual. We've already incorporated a lot of NDCs, the unconditional ones. So it's already assuming that we're moving forward on things that are already onshore. So, but in that case, it's unsustainable. Yes, the North Mediterranean countries are moving along because they have the European Union, and it has to be clear. And I think this ties back to synergies, common policies, getting together. And I think this is a message that's finally coming across. Because when you do it, things happen. When 2020 first rolled out, everyone's saying you can't achieve it. And we went beyond. So it's possible. And it has actually led to people and other countries realizing that you can actually embark on something, and it might look impossible, but you can actually achieve it. So there's a dual sign. Yes, it's extremely ambitious. Yes, if we continue to where we are, we're actually doubling the demand in the South Mediterranean. And if we continue the way we are, even with this NDCs, the minimal targets, it will still be a fossil fuel-based world. So we're 75% of the mix today, and it is 91% fossils in the South Mediterranean. So yeah, we talk a lot and projects are developing, but the scale is not yet there. So we need to move forward. But the positive sign is that everyone now has embarked on that net zero targets, is talking about it, is making plans for it, even in the South. So a couple of years back, they're saying, oh, we can't make 2050. Now everyone's saying it's feasible. But how do you roll it out? As you can see, obviously, the main item is energy efficiency, because you have to reduce demand. So overall for the Mediterranean, that's 20% from today's levels. But we're adding 120 million people in the South Mediterranean. So this is a huge feat, especially the GDP is increasing, which is a good thing. And we want people to access the energy services that they need. So that means that the demand not only needs to stay and stagnate, only increase by 6% in the South. So it has to be more efficient, like way more efficient, and more green, so renewables. This means that you have to electrify your end usages. And you mentioned this for transportation. Transportation, it's not just electrifying, it's reducing it. So yes, you need electricity and hydrogen, but you also need to stop using transports. And that's a huge transformation. But the positive is that in the South, it's going to be easier. You're building new cities, you're building new infrastructure. You can make it efficient. It's less costly and it's easier to do than it is in North countries that are already urbanized. The other, of course, big sector is going to be power generation. Good news is power generation is already moving forward with renewables. So there's 36%, so more than a third in the north that's powered from renewables. And in the South Mediterranean, it looks low at 21%, but we know that it's increasing. Even in reference scenario, we're expecting it to pick up. Not enough, but it's picking up. So this is a good sign. And I think this is where change happens. So on power generation, but what does this mean? It means that you need to invest in solar and wind. And this is only for the demand. You mentioned hydrogen in Morocco and other plans for export. Look at the increase we're seeing this. A lot of it will come from South and a lot in North Africa. North Africa has been multiplied by more than 50 the current renewables, solar and wind that they have now. If you want to do the export capacity that they're planning, then you have to double that. So 100 times more than you have today. It's possibly feasible, but you need timeliness, investments, and at the right time, and the infrastructure, the industries, and everything, which would create jobs. Another important thing to notice is the battery storage. So you need to have battery storage for the system to work. The same thing for a CCS. If you want the system to work, you need the different technologies and you need everything. You can't just rely on one. You mentioned energy security. This is a big issue in the region. We are suffering from geopolitical fallout. Every year as the dependence increases, this is a real issue. For exporters, for importers, it is a disaster for the economies, especially in the South economies. If we continue the way we're going, even with the improvements of NDCs, we are facing a huge problem, especially in the South. You're saying the red bar in the South, 29% from 6% now. 6% now is a disaster, 29%. This is hiding disparities between producers and importers. But this means that the geopolitical strain is impossible. And this is actually, in a way, a good thing because it drives countries, not even considering climate, you have to change trajectories. It's not just a question of climate. So the final thing is the CO2 emissions. Obviously, the net zero goes to zero. One thing you need to notice, yes, renewables, energy efficiencies are the drivers of the net zero. It can't be done without the green gases, without CCUS, without electrification and energy storage. But one thing you have to notice, yes, we talk about China, we talk about everything. If the South Mediterranean doesn't embark on the transition, EU emissions, their cutting CO2 emissions, will be matched with what's being produced in the South. So there's no point in doing it alone. We need everyone to be on. And the Mediterranean, its neighbors, and we've seen during the pandemic, we've seen during the crisis, we need our neighbors, and there's so much synergies. You mentioned, yes, we need a network, we need transmission distribution. We don't need it just north-south, we need it south-south, north-north. We've seen north-north how it works, because the world of renewables is an unstable, variable system that needs other systems, and they need to be compatible. Voila, so that's me.
Thank you. Thank you, Lisa. This is very forceful messages, and it's very clear. I mean, when I see data and estimations up to 2030, 50, we have, a roadmap. So we know where we're going, but then we're not going in that direction. So what you're saying we are going backward, in fact, not even.
No, we're not backward. We're going there, but too slowly.
Sorry, but with the geopolitical tensions, and when I see the demand for fossil fuel, in my view, and being an observer over the last 15 years, they're going backward a bit.
We are creating more tension, yes.
Okay, so this is what
and we're seeing it. I mean, we're seeing it every day.
So this is my first point. My second point is, okay, you're talking about the Mediterranean, again, South Mediterranean, based on the geographical area, but there is a huge potential for Africa, and I still believe that you cannot disconnect the Mediterranean from the African continent. So this is also extremely important to think that not in a fragmented way. I think nowadays, fragmented way, we need to have a view of a region as a whole. So this is the second thing, because then the assessments are adapted, and they have a different perspective, in fact. So this is my second comment. And my third comment, of course, if we move into your scenario of decarbonization, then we need huge amount of investments. Now, my point to you here is who is going to pay for it? Investors, international investors, or the countries, or a collaboration between both, knowing that the risk premiums in all the countries of the South Mediterranean, going from, I mean, maybe Morocco is okay, this is why there is this nice partnership that has been signed, but then all the other countries, all the risk premiums have increased dramatically. Okay, and at the same time, there are other priorities in these countries, food security. I mean, there are a lot of extreme events in the Mediterranean South. So this increases the cost. We exited from a pandemic, and these countries are not deep pockets, so they don't have fiscal space. So my question to you, and maybe also to Nadim, who's going to pay for it?
Okay, can I turn it around?
Yes.
We have assessed investment needed for the scenarios. If you go for the reference on the reference now, it is nearly 4 trillion euros, 2050. If you go for the transition, it's 7 trillion. So yeah, it's a huge difference. But it doesn't take into account the inaction costs. You were telling, what's happening to these countries. I mean, the crisis we are seeing are a direct consequence of the geopolitical tension and of the climate change. So I know it's not the same people that are paying but if you're going to put 4 trillion already, you need to find these 4 trillion. Don't put them in the reference, put them in the net zero. So that's the first question. Second is, if we had to calculate and at the national level, because of course, when you're talking about solar or fossil fuels, it's private companies that invest and they're not getting the money back. So they need to, if they want to invest, they have to get the money back. But if you see it as a whole, the cost of inaction is going to be way more than the 7 trillion. So you're better off going at the 7 trillion. It doesn't totally answer the question of how you
the ball back to me. I don't know.
But I'm just saying that when you think of investment, I'm seeing that insurance companies are starting to see this as well. They are paying a lot. They're not sustainable either. So there is a question. The system is going to need to be redone. But I think there's a political will that can make it happen. And yes, we said we have to change the finance, make it so that investors want to invest. But I think tying it globally, being part of global targets, is going to be a reassuring sign for investors as well. And it's going to start becoming profitable when we invest in technologies. For now, yes, there's a risk taking. But I think we have to send a message that that's the only way we're going and we need to go, because the other side is just unsustainable.
If I may, I completely agree with what she just said. And I would say that at this moment, because of the panic about energy security, we do see investment of private companies into oil and gas in these countries, in the Mediterranean, in Africa. And these investments are covered by public guarantees to cover the risks that you're talking about. So we should apply the same logic to investments in renewable and other infrastructures that could actually advance energy transition, instead of keeping investing in old patterns of development that they do seem to be failing right now and not in line with plans.
Okay, so I move straight to Federico. What do you think about all of this? And from your point of view, FIM is a think tank, but
yeah, so it's a more it's
the private sector. So
let's say that we are first of all a research foundation. Then the products of our research, they become also hopefully object of policy briefs, and therefore from research to being a think tank. So let me start briefly by presenting what we are currently working on, and basically in the framework of course, the energy transition, but specifically for the Mediterranean. So we are developing a macroeconometric model along with Oxford economics that basically builds up on what was previously presented, because basically what we do is that we do not take GDP as exogenous, but we try to understand what are the implications on GDP of different decarbonization scenarios, including the damage function. So that is, what is the damage that the GDP and these countries might have should we not be able to reduce our emissions. And we are doing this because we want to understand, and so we decided also to develop this kind of model, so an econometric model, because we can not only see some snapshots of what would be like in 2030 and 2050, but we want to see the trajectory from today up till 2050. to understand if there are some negative impacts on the GDP in the short term for future gains, because this then informs policymakers and should also inform the politics and even international cooperation. So basically what we have an integrated model where we have the North Mediterranean countries and Southern Mediterranean countries, including the possibility, of course, of trade and investments. And basically what the model is telling us is that if we start with aggressive decarbonization investments in the short term, meaning that by 2030, we see that all Southern Mediterranean countries will have a lower GDP growth with respect to a reference scenario. Then what happens is that in the longer term, okay, so by 2050, almost all countries will deeply benefit by an energy transition, okay? The only exception is Algeria, okay? So Algeria, in all our scenarios, okay, the GDP is lower than a reference scenario. So it means that for Algeria, any possible gain that you get from a reduced damage function, so less damages from climate change, will not compensate the loss in revenues from oil exports, okay? And it will dramatically affect also the public budgets, okay? Particularly if we go with a totally renewables electrified scenario, okay? Instead, or this is the example for Algeria, if we promote alternative decarbonization scenarios, so more of blue hydrogen, more of syn fuels, more of CCS, we see that this is the case only for Algeria. It could benefit way more than a situation where it is the standard idea of that we have of decarbonization. So all the other countries in the Mediterranean, they will benefit, okay, dramatically. We are talking about 8 to 10 percentage points more than the reference scenario, okay? So in the longer term, but in the short term, and this is a political issue, because it means that if we go to these countries and we say invest now, it is likely that in the short term they will not see the benefits. So we need to find a way to compensate for these losses. Otherwise they will not invest. Okay, because you cannot tell to a politician that you're going to lose in the next 10 years so that you can benefit in the next 30 years. So this also comes to who could drive and who should be driving investments and who should put the money. And when we say that we should put public guarantees, it's right, but Southern Mediterranean countries don't have the credit worthiness to do it, most of them, and in Sub-Saharan Africa even further. So you cannot expect a country to put sovereign guarantees that are not accepted by the financial markets. And it is in any case easier for these countries to have some sort of guarantees when it comes to developing fossil fuels, because the worst case scenario is that I will export the fossil fuels. But if I invest in renewable energy, so if I invest in electricity, it's very unlikely that I will be able to export it. So if I make the investments, I know that my only purchasers are local companies, the utility, or the government. If I develop an oil field, I know that the worst case scenario is I ship it somewhere else. So we are back to the idea of developing lots of transportation infrastructure. So we need to invest heavily in the interconnection between Northern Europe, Mediterranean Europe, and then the southern shore of the Mediterranean. Of course, must do it in a way that we are not investing only for exports, because then you would basically be developing PV plants just to export to Europe, but in a way that we provide co-benefits, so that those transmission lines are used bidirectionally. So you sometimes export power, but you also import power. So, but inevitably the money must come from Europe, and inevitably guarantees must come from Europe. And precisely because we want to avoid what we've seen, that we do our decarbonization, and then the southern shore does not do. And so you have a double damage. You have the climate function in general, because you have more emissions, and therefore everyone will be impacted. And we know that the Mediterranean is the most impacted region of it all. So if we are talking about +2 degrees by the end of the century in a global level, in the Mediterranean it will be +4 degrees. Okay, so we must act, but we know that we must be aware of the fact that the GDP in the short run for some countries might be negatively impacted unless we put some further additional measures to mitigate it.
Thank you. I had just a clarification question. I think you're mentioning the whole, I mean, all the region as a whole, but there are different countries here.
Yes.
I mean, Algeria and Libya, they are, you know, they are producers and they are net exporters. And you have the other countries that are net importers of
Yes.
oil and gas. So practically the debate is different. Okay, so of course the incentives are completely different. The incentive
Yes.
structures are different. Now it's all about the strategic, I would say, behavior of the countries. If they see the demand, the global demand is moving into renewable, so most probably, and it's, I would say, realistic, because you still need the transportation and all of this, then of course they can go and invest from their own domestic, you know, the domestically impact, okay? But then if they see a whole lot of uncertainties, no investor will move into that direction. And you mentioned that the money has to come from Europe. Maybe it has to come from other players, including Europe, only from Europe. So you say, absolutely. I mean, so it means that it's not really, you know, confined to the European partnership. I mean, you have other players, GCC, for example. You mentioned the GCC, and I think they would like to move into, you know, developing this sector. But then you have other countries. China is investing also heavily. So I see a lot of uncertainties, but at the same time there are possibilities if we know where we are heading. And I think I would like to hear now from Dean, PowerShift Africa. I think you have done a lot of work on the campaigning side. And what do you hear? What is your perspective out of it?
Thanks. Thank you so much.
Please.
On my end, I think that the first thing that we need to consider is the idea that currently there's an energy crisis, and that needs to be acknowledged, right? And that's perfectly fine. But from an African perspective, we're not really trying to go the reduction route. So we're not looking to reduce emissions. We're looking to, or manage them, to say the very least. We're looking to avoid them, which is why it's very important for a fossil fuel phase out, which is very important for us before to build a developmental pathway that is based on clean energy. And based on that trajectory, I don't believe the notion around, you know, other like oil, gas have a role to play to unlock us, to usher in really the renewable energy transition. I do not think that can fund that. At the end of the day, it presents a false solution, because currently the big problem that we face is Africa holds 60% of the solar potential for the entire world, 40% of the critical minerals required to decarbonize. Why are we not investing in that potential? If we are truly saying that there's a global energy crisis that we want to tap into, the market exists already. All we need is the investment. And that really speaks to the structural traps that Africa has been embedded in for the last 50 years. Yes, we can argue about the trajectory around the economic analysis around it, but also you need to understand the underlying issues that Africa has been embedded in for the last 50 years, as I've mentioned. In order for us to understand this, we have to look at the financial architecture, right? When the financial architecture was structured for the first time in 1945, there wasn't any African country independent. And it's really clear and simple that then that means at that point in time, colonialism was very rife, and that has never been revised. That means that that economic activity that dictated how the world functions still operates now, which would to a large extent also then put Africa in a very precarious position to access climate finance as well. Because we keep thinking around structural adjustment programs, we keep thinking around access to loans and grants and guarantors and financial backers, because that's the economic activity that was detected during a point in time when the world was in an energy crisis. So what we're trying to do at that point was to colonize. And unless we are then suggesting that is the new version around energy colonialism, then the answer is wrong and far-fetched, right? And what we need to be now understanding is how can we co-create a new energy system with the people-centered approach. And I mean, these words have been thrown around quite a lot, but it's a very simple aspect as well in terms of freeing and revising the global financial architecture to access climate finance. We've talked about the export aspect. The current way system is being structured right now is we don't have local ownership of even some of the solar PVs that are currently in Africa right now because of the way the economic activity has been detected. That means even if we do usher in those PVs, we do not have local ownership. So we don't have a part of that pie. If China is investing, we've seen that with Zambia, we do not have access to those natural resources. They actually own the mines. It is not African countries, which speaks to the historical legacy that has been perpetuated by the fossil fuel extraction, right? And then we need to now also understand that if we are to also invest as Africans or sell that energy produced by renewable energy, we are selling it in a currency that is not traded in Africa. For example, if we sell energy to Europe, we don't have euros. We don't have the United States dollars. That means what we do sell in the month of December, in January, to be a different stock market, exchange rate, right? Meaning we're functioning at a loss. Currently, Africa is losing over close to $500 billion because we are trading, even in our food markets, in a currency that is not ours as well. So there's a significant amount of issues that need to be addressed in terms of the global financial architecture, in terms of revising economic activity that can actually feed in towards creating an energy system which is for the people and by the people, where we can all equally benefit. Because at the end of the day, we will make a mistake. Already the mistake has been made. For example, if you look at Kenya, there's a huge hydro plant in the northern side of Kenya that was done incorrectly. And actually, in as much as Kenya has about 90% of its economy based on RE, a lot of people were displaced, right? And that, again, we're just really recreating another system that is grounded on exploitation and land disposition. And even then again, if we get the RE aspect right, and then want to take the reduction route like CCS, again, it's a full solution, because it's not like we are predicting climate change or the climate crisis. It's already occurring. So carbon credits or carbon storage solutions do not really provide an immediate or even a long-term solution. In fact, in Africa, it's only worked in 5% out of 100 instances. That means the 80 to 90 has actually failed. The second aspect around CCS is, even if we do initiate CCS in the light of actually trying to fund the transition, we're still not getting it right, in the sense that we are dispossessing people of land. I say this because currently in Kenya, in the Ogoni region, there was some land sold for CCS, and those people were also displaced at the end of the day. So it doesn't make sense. Again, land ownership, land disposition becomes a very strong argument in these instances. It has happened in Liberia, it's happening in Zimbabwe right now. So there is not necessarily a system that is being created which can be considered sustainable, because sustainability is a holistic term, particularly when you look at it from an SDG level, sustainable development goals. And we have to understand that. And even if we were to pursue that structure, we need to take it very seriously, even here at COP. Because if you look at the water aspect, right, it takes 1,476 liters of water to produce 1 megawatt of electricity using coal, for example, in comparison to the 25 liters you use to produce solar energy. And that speaks volumes. But we are still stuck in this cycle of extraction and pushing for fossil fuels in the mix towards a renewable energy transition, which doesn't really make it very clear, because there are certain instances where that was promised. In Mozambique, that is what was promised. And again, the 70% of people that didn't have electricity 5 years ago promised that transition through the gas, still don't have electricity today. So 5 to 10 years later, still, it's not existing. And the funny part is, in the eyes of an investor, Mozambique is not investable anymore. And that is really because we unlocked a system or fossil fuel system that does not work for Africa. And that's where the problem is, essentially. And those keep popping up constantly across Africa. And we just need to be very mindful with the approach moving forward in terms of how we access finance. Yes, there's the ideas around loss and damage as well that really will play a crucial role. Loss and damage is a big debate. But the biggest polluter, right, is only contributed 17.5 million. In comparison to other producers, I mean, UAE contributed 100 million. That speaks volumes about the political will and commitment that is needed for the transition, and that is absent at the moment. And I believe that's something we just all need to tackle and collaborate on. Thanks.
Thank you very much, Dean. I think you brought the debate to a very essential point, which is we need to have, I would call it a just, equitable transition. And this is essential I think we have been moving into one-way needs for many years, and we need to rebalance those needs and work together toward a just and equitable transition. And I think this is what we need to also change our mindset even in the assessments, in terms of the data collection, in terms of, I would say, not to fall into the trap to have a fragmented approach to solve this global challenge that we are facing with the energy crisis.
Yeah.
We have an energy crisis. We have different products. We know that. I think the data says something, and then the communication, or call it the political communication, says something different. And I think we are researchers at the end of today. I think we are here. All of us are researchers in different perspectives, and I think we have to be aware that we need to move into all together, at least to give the right pictures. And I thank you very much for bringing Africa. This is why I mentioned Africa to you, of course. Observatoire Méditerranéen, de l'énergie is for the Mediterranean. But we need to have observatoires that are really for the region, even globally. Of course, in your case, we are looking at all the global aspects, but we need to really invest more in data collection to understand really what are the implications, but then not to focus on one single needs, but then focus on all the needs together from different perspectives. And this is what I call just and equitable. Thank you also, Dean, for mentioning to us the global financial architecture. And these are, back to my question to you, and you will give it back to me, which now, I'm giving it back to you all. I think we need to think to reprice the risks. I mean, the risks have been priced 100 years ago, maybe, just giving a bit more time, but now we need to reprice them differently, because we need to rethink the whole underpinning of the finance, and what do we need finance for? We need finance, in fact, to be serving the society and the planet based on the challenges we have. And I think having, for example, guarantees one way, but then I think what you mentioned, you have the international financial organizations. Up to now, we are still in the logic, trapped in the logic of bailout, but we need to think of a completely different logic. And in my view, and I think we have debated this, in many instances, is the transparency. We need to have more transparency from all parties, not conditionality, but transparency. Transparency means at the global level from all parties, countries, private sector, and then whoever is using the funds. Okay, so with this, thank you very much for bringing this back. I would like to go back, since we heard Dean, I would like to go back to you, Giulia. What do you think about all of this? Maybe we have 1 minute.
1 minute.
Okay, 1 minute.
Well, I think we are right now, we have great opportunities, great challenges, but also great opportunities. And it's up to us, instead of repeating mistakes of the past, to invent innovative ways to get there where we want to go, right? So energy transition does not mean just electrification. This is a part. We need to really start planning a new industrial revolution based on clean energy, which takes into consideration all the aspects. The holistic approach that you mentioned, this is what we need to have. So I think this is, I'm optimistic that we can right now.
Optimistic here, Nadim.
I would concur with Giulia on this, because again, the challenges for that specific region, we mentioned climate, we mentioned the geopolitics, we mentioned so many others, but opportunities are very big. And let's not forget also the human skills that this region has on both sides, and actually those skills travel across the region. So we can come back.
Oh yeah, I'm gonna be optimistic.
Yes, too optimistic.
So we'll be optimistic, because when we did the 2020 everyone said that, which is pretty good, we did. We see it's moving forward and it's gonna benefit. I know short term it's probably more short term based. You need to look long term. When we look long term, there's no question it's gonna be beneficial. We just need to raise the awareness, and I think it's starting here now. I think it's
So I'm going to be pragmatic, and I would like to reply to what you said. So we want to achieve net zero by 2050. That means that over the next 25 years, we will still have some production from oil and gas. And this could also speak to the problem of who's going to finance it. So the idea of saying that let's not develop anything in Africa because we are late comers implies that countries that have already developed the oil and gas industry will keep on getting revenues from those. Okay, and so they push this argument. So don't develop anything in Africa so that as Norway, the UAE, or other countries, we can keep on selling oil without any competition. So why not do the other way around? You have benefited a lot from oil and gas, so stop now and let's have the remaining 25 years of the oil and gas be served by Africa, either physically or virtually. So why not Norway next year says, well, all my oil and gas revenues will be virtually transferred to African countries that will not develop their own oil fields, and so they will have the money to finance the transition. So Norway has benefited 100 years from the oil and gas sector. So, but we're not talking about this. And instead, we're talking about the fact that Africa should keep the gas and the oil below, because if 50 years or 30 years from now, we will not be using it any longer. So basically, you are basically keeping below something that could give you hard cash. And so when you talk about the fact that by trading, you are losing money, you are losing money when you are importing, because you are importing in goods that you pay with, that you cannot pay with your local cash, and therefore you are losing. But when you are exporting, you are getting hard cash, so you never lose money there. So,
Federico, thank you. The last word to you.
Yeah, I want to respond as well. I think that's great. Nigeria has had oil and gas for 30 years now. Nigeria is not developed, so you don't need oil and gas necessarily to develop in Africa. I think we need to divorce ourselves with thinking that the only way to develop is through oil and gas. When mankind moved away from the Stone Age, it's not because we ran out of stones. We need to really understand that in order for us to move forward.
Thank you very much, all. It's really nice discussion. Thank you very much, Giulia, Nadim, Federico, and Lisa, for this great debate. So thank you all. We're done.
Thank you.
Thank you. Okay. Thank you.
Are we off?